OK, thank you, guys. With the cost of living pressures combining with high house prices, many young Australians are turning to their parents for help to get into the property market.
New research from UBS has found that roughly 50% of new buyers dipped into the bank of mum and dad to purchase their first home. So what should parents know before forking out cash to help their kids? For more, we're joined by financial advisor and author Helen Baker. Hello, Helen.
Hi, how are you?
Half of first home buyers are using family support to break into the market, but it's something you say that people shouldn't rush into. What's your
don't
advice?
rush into it. I think we want to work out how we make it work, because pretty much every client is asking for it. But what we need to understand is, given the rise in the cost of living, how long we're going to live and the uncertainty of the future, how do we do this and make sure we still have enough for ourselves? What is it that we don't know?
What are some of the common issues that people have when lending money to their family?
I think the three big ones are around health, around relationships and around working or income in the future. And it's not only for yourself and your partner, but also your children. So, for example, if you gift it to your kids and then they have a relationship breakdown, is that money going out to their ex, and how do we prevent that from happening?
Yeah, you say health too. What do you mean by health?
Yeah, just because we expect we're going to work for this long or our spouse is going to work for that long, and often things happen that affect that, even for the kids as well, and we don't have maybe income protection in place, or we thought we'd have longer to work and save more, now we're having to draw earlier. So a lot of issues around access to funds.
OK. How do you find that right line between giving meaningful support but not leaving yourself short for retirement?
Yeah, that's the tricky one. It's obviously around crunching the numbers and then looking at different scenarios, but it's also about understanding structures. Do you buy it with your children together? Do you buy it for them and they rent from you? Do you gift? Do you loan? Do you just go guarantor? There's a whole different amount of different ways that you can do it, so it's finding what's right for you.
How do you do that? With an accountant, financial advisor?
Financial advisors are good, accountants are good, estate planners are good, mortgage brokers are good. Get your team.
All right, yeah. Now, outside the bank of mum and dad, there's this growing movement that sees people co-investing with friends or siblings. Pros and cons of that?
Yeah, it's great because getting in individually is quite difficult. So going in with a sibling or a friend gives you that economies of scale. There's risks involved in that, pros and cons to it. I talk about good times and bad times in the book about that, but it's definitely another way to get into the market and hold some ground in that. If markets keep going up, you're in.
Yeah, you've at least got a foot in the door, but then you've bought it with your friend suddenly wants to cash out and go live overseas or something.
Right.
So that's a problem, right?
And totally common, or they get married or they whatever. So what we want to do is document through various scenarios. Everyone understands what's going to happen under that scenario. So when it happens, when it's emotional, we go back to, OK, this is what we said would happen in that scenario. So you planned for it.
Right, OK. Lots of good tips there.
Hopefully.
Thank you. Some great books here too, Helen. Thank you. Helen's book, Money for Life, is out now, and she'll be speaking at Dimmock, Sydney tonight, 6 p.m. For more info, head to themorningshow.com.au. Thank you.